In this next lesson on the price action patterns, this is again part 3. In part 1, we covered triangles. In part 2, we covered head and shoulder patterns. In part 3, we're covering double bottoms or double tops. Now, double bottoms and double tops, again, they happen all the time in the markets. They're very common. However, they are not my favorite pattern when it comes to trend confirmation. The reason being is that, as you will see when we jump on the charts, a double top or a double bottom, right, it means that it rejected resistance twice, right, or support twice, same kind of thing. So it doesn't give us a full picture, because a double top or a double bottom can still turn into an ascending triangle or a descending triangle, which is a continuation pattern, as you guys learned in the part 1 lesson, right, under price action patterns. So it still happens, it's still common, it's still good, but there's a different way of trading those patterns, and there's different risks that you need to be aware of as well. So with that said, guys, to explain this further, let's have a look at the charts. All right, guys, so right now we will be looking at another set of price action patterns called double tops, double bottoms, also triple tops, triple bottoms, quadruple tops, quadruple bottoms, and so on. Okay, so what does this look like? So we already looked at different triangle patterns. We looked at head and shoulder patterns. Now this one, it's not my favorite, but it happens quite a bit. And it's not my favorite because it doesn't offer a lot of confirmation. But, I'll explain that in a second. So assume we have a bullish trend, okay? So this will happen at the top of the trend. And then get one hit, get a bearish move. So maybe a wave 4 pullback, right? And then a wave 5 run that just makes it to the highs. Okay, and then it starts rejecting something there. Maybe there's very strong resistance. All of a sudden, it's giving you a reversal candlestick. Okay, so this is a double top pattern. What you would want from this is that it continues all the way down. Starts a new trend, right? So this is a double top reversal pattern. There it is, double top reversal pattern. That's what this is, right? So we were in a bullish trend, we hit resistance, we had a wave 4 pullback, then we had a wave 5. It did not continue higher. Instead, it stopped, rejected the highs, and broke back down. So obviously, you can take the more advanced entry, which would be right here. Okay, why is it more advanced? Well, it's more advanced because we don't have a trend change confirmation. Okay, confirmation, that's the key word here. We have a potential sign of a trend change coming, which is this double top. The double top means that the bulls failed to continue higher. And because they failed to make a higher high, the bullish momentum is weak and the bears are taking over. Okay, the bearish pressure is taking over. But why is this riskier? Okay, the reason why it's riskier is because what? It could develop an ascending triangle, could it not? And then get squeezed out to the upside. Right, so that's why I said this pattern is not my favorite, because it starts off as a double top, but then you don't know what's gonna happen. You have no idea, right? It could just turn into an ascending triangle and then break out higher or break down lower after. So playing the top, whenever I'm playing the double top from the highs, unless I have multi-time from confirmation, which that's totally different. If there's something on a weekly or something on a monthly that's telling me this is going to go down, then there's much more confluence with a head and shoulder pattern, such as if we have a reversal candlestick on a monthly or a weekly, and then the double top is developing on a daily, then that's a lot of bearish confluence. And at that point, you can potentially take a longer term short position. But if you just have a double top and all you have is a double top, then playing this initial double top to the downside is a little bit more risky, because it could just develop into an ascending triangle. So you have to have a very aggressive management technique, which that's something I will teach you. There is an aggressive management technique that I do teach, and that will be utilized in these type of conditions. So let me go back. The confirmation comes in on a double top when it fully breaks down. The confirmation is the breakdown, the lower low. Now we have a double top, and as soon as we break the previous low, now we're already confirmed into a bearish trend, right? So once you break down, then the entry will come in right here, once you make the lower high, I'll take the trade short, because now you have a double top, lower low, lower high, and a trade short. Okay, so that's how double top patterns work. Now, it can obviously be a triple top, and then kind of start off a ranging market, but a ranging market is not as good as a trending market, but that's kind of what you could do. So playing the highs, from the highs when there's really strong resistance, whether it's a double top or a triple top, you still have to be careful to the downside because it's not a fully confirmed trend change, okay? Now the same thing can happen to the downside, to the upside, so we can be trending down, and then when you hit the support level, pop up, make a double bottom, and then break out, retest, and a trade long. So now we have confirmation, and now it's a beautiful trend. We will see this a lot. I might, when there's a double bottom, it's very rare that I will take an advanced breakout, one of my advanced positions to the upside. I will typically wait for the retest, for the initial breakout strategy, and then I'll take the retest. That's how I'll typically trade these patterns. It's very rare that I will take the double bottom unless there's just higher time frame confluence and the other time frames are beautiful. Then I will take more risk and take this more aggressive option. But often with double bottoms and double tops, I will wait for the confirmation like this, the higher high, and then trade on the higher low. That should make sense. It's not too complicated, so I'm pretty sure that makes sense. So with that said, let's have a look at some examples. So the first example, Pound CAD has a lot of examples of this, and what do we have here? Well, we have a few patterns. First that you see here is a potential head and shoulder, right? Left shoulder, neckline, head, right shoulder, right? And trade short. So here's a head and shoulder pattern. We just learned that in the previous lesson, okay? Now, check this out. You'll know exactly what I've been saying now. So over here we have a double bottom. We have support in this region, just like roughly right there, a little bit higher. Right, so previous highs, what was once resistance became support. Double bottom, beautiful. What candlestick is that? You guys say it in your head right now. So the bullish engulfing reversal, right? So double bottom, bullish engulfing reversal. This is a potential trade to the upside. But is it? Because at the same time, we're making these lower highs, right? But in this case, you see it did break out eventually, right? So here's the double bottom that did play out, okay? So that is a double bottom example. And then eventually we had a triple bottom and then another continuation high. And I was trading both of these options when that was actually happening in the market. So that's one example of what that could look like. Obviously we could have the same thing on a daily chart. Daily chart right here has a few examples of double bottoms, right? The first example is right here. Here we have a double bottom price action pattern right there. And this is a move that I've been trading as well back in the past. And guess what? Massive. Look at that divergence. This is huge MACD divergence. But you see, it never broke out higher. So you got to be careful on the upside. And I only took this as a quicker position. I didn't hold this for too long, right? But here it is, double bottom. The price went up, but didn't clear the highs, okay? It continued with the bearish pressure. And then guess what? Another double bottom. And it doesn't have to be perfect, This is called a false breakdown, because it just kind of broke the previous lows and then right away started exploding to the upside. So something like this is called a false breakdown or a false breakout if it happens to the upside, right? But here again, you also have divergence, previous low, whereas this is making a lower low in a way. This is a higher low. This is also double bottom pattern. So not my favorite, but they do offer really good opportunities as well. And here's even another example of a double bottom pattern. Here's an example of a potential double top reversal pattern or a triple top, And then price action started to break down. So that's kind of how these patterns look like. And they do offer rejections, reversals. So the way to kind of keep an eye out on is the previous high. And then do we have deceleration? This just accelerated massively to the downside, didn't even decelerate. So that wasn't a trading opportunity. I have one more example to show you. Monthly chart. Here's a double bottom, right? And let's have a look at a different pair. These patterns are very simple, extremely simple. Some of them simplest patterns there are. And here we have a double top. But what is it also? It's also an ascending triangle. It's a double top, but it's also an ascending triangle. But you see here that we have a big bearish engulfing, right? And then price broke down to the downside. So that's what I've been saying. Double tops churn into triangle patterns. They could very easily churn into triangle patterns, so you really have to make sure that the rejection is really good, like with this massive bearish engulfing before taking a trade. So that's it for double tops, double bottoms. That's all you really need to know. Understand that trading the top itself is the riskier option if you want to avoid the risk, because as a beginner you probably would want to avoid the risk, and that's something I will actually be speaking to you guys about when I'll explain the strategies themselves. So as a beginner, you would probably want to avoid that risk and wait for the confirmation, such as right now what's actually happening here on Swiss yen weekly chart. This is a perfect confirmation in a way, and that's what you would wait for. So instead of playing the double top, wait for the confirmation, the retest, and then take the trade short. And that will all be explained within the strategy lessons themselves, guys. So that is it for double tops and double bottom patterns. Hope you guys enjoyed it, and I'll see you in the next one.